Just give me a minute. I don't know why the sidebar came off. Okay, so before we start this CCR 3, can everyone tell me how many questions do you think will come up from here? How many MCQs and how many of these, what do you call that? The percentage. Just give it a try. How many? You can unmute now, just give it a try, or you can try, put in the chat.
20%.
Okay, any more? Good try. Come on, so everyone, I want you to participate.
50.
50 questions, 50%, 30%. I see some people type 25%. Okay, quite close. Somebody is talking, but it's quite, what do you call that? Quite soft. Okay. Now, the thing is, there's 23 questions coming up from here, close to about 25% and all that. So, of these, how many do you think are based on calculation formula where you need to calculate out? Give it a try. %. 5 questions, Perry says. Okay, the rest, please give it a go.
About 30%.
About 30%, yeah? Of the, just now we said 30% or 25%. Okay, now I tell you, there will be 23 questions coming out for this CCR 3, which is quite a lot, so you pay attention, and we will tell you where to highlight, where to underline, and where you can study zoom in, yeah? And out of this, there are only 3 or 4 questions on formula. Not all these questions will be on calculation. Maybe 1, maybe 2. So you don't worry if you think that you don't have accounting background or bookkeeping background and you cannot remember all the formulas. Don't worry. Go for the low-hanging fruits. Those easy questions where it's just some theory and you can just tuck it out. Just study those, okay? Now, out of 3, 4 questions, 1 or 2 will be on calculations. So if you tick out, at least you will get half of it correct. So what we want to tell you is don't worry, okay? If you can score everything, fine. If not, go for the low-hanging fruits, you definitely can pass. Okay? That is what we want to assure you. So now we will start, yeah? You look at this. So there are 4 chapters here. Sorry, I've got a bit of cough this morning. The first one will be general accounting principles, policies. Very simple, okay? Then understanding financial statements, there are only 2 parts to it. Actually, profit and loss, balance sheet, yeah? Then quantitative analysis, and finally, qualitative analysis, okay? Let's zoom in. The first one is general accounting principles, policies. Okay, in the financial statements, there are only 2 parts to it. Okay, there will be part 3, part 4 later, but generally, we say a company has financial performance, we look at in financial position. Financial performance, we say we look at the income statement. Financial position, we look at the position statement, which is called balance sheet. There are basically 2 types of accounting. One is management accounting, one is financial accounting. Management accounting, as we say, is all about for internal reports for management to use. So there are no rules to govern how the presentation should be. Why? Because your management will tell you how to do it. Like they want to do a KPI, a budget, they want to chase you. So they will tell their accountants how they want the report to be. Whereas for financial accounting, it is used by external parties, stakeholders. And once it's used by external parties, there will be rules to govern it. So the format is governed by 2 things. Companies Act 2016 and MFRS, Malaysia Financial Reporting Standards. Okay, so this is to ensure that all the accounts that we get are reliable and they are fixed to certain standards. Okay, the primary role of this is just to report transactions. Okay, we just go back a bit. Okay, accounting practices. Okay, you can see companies, they are allowed to choose certain accounting practices to suit their business.
Hold on. Go back to the slide.
Go back
back
to
to the
this.
slide. Yeah. What can come out from the exam,
Yeah.
guys? Which one can come out from the exam? How the question going to be structured? Sorry, I got to interrupt.
Yeah, okay, thanks.
Participants, which one can come out from the exam? Remember, Jay say what? It's very textbook mentality. We are not here to train you skill. We are training you pass exam. Now, in this slide, which one can come out for an exam? Anyone?
Financial accounting.
How it come out? You must, when you read the notes, you must think. So you must highlight.
Difference between management accounting and financial accounting?
Yes, it may come out. You're right. Another one? Another question come out from here?
True or false?
Huh?
True or false? True or false. The question must come out true or false.
No, they won't come out true or false. They come ABC. MCQ is ABC, not true or false. Which one can come out in the exam again, other than the difference between management accounting and financial accounting?
Primary role,
Pardon?
primary role of FA, financial accounting.
Yes, you're right. Remember that. Highlight. Primary role of financial accounting is to report business transaction through financial statement, not to assess current net worth. They may ask you. The wrong answer is not to access current net worth. So another question. Another question can come out. You see, this part can come out 3 questions. One is different, one is primary role, one more. Very important.
Maybe they will ask management accounting governed under any acts or what?
Very good. Highlight that one. The question come out under the reporting financial reports for companies, for company registered with SSM, are governed by what? 2 Act. One by the Company Act. Every company registered under ROC must report accounting under CA 2016, and they must follow what?
MFRS.
What reporting?
MFRS.
Yes. So highlight these 3 parts for this quiz, for these slides. Okay, very important. Remember, we are here to identify for examinations, not skill-based, because it's very textbook mentality. Okay, good. Carry on, Huiwa.
Okay, now the next few slides, especially slide 7 to 11, I will tell you to mark it because exam questions will come out from there. So before we go to slide 7 to 11, we look at slide 6. Basically, to tell you in this world that in accounting, when they prepare statements, they have to look at the nature of business, right? A manufacturing company will not prepare the accounts in the way that a trading company or a developer or say a data center would report. So they are divergent accounting standards. But all this preparation must be based on certain accepted rules, right? So that we can compare these financial statements effectively and consistently. So These rules are known as accounting doctrines and accounting principles. Okay, so accounting doctrines is what we will study next from page like 7 to 11. So you just remember this CCDM. Okay, CCDM. We will go through one by one, and there are a few questions that will come out. The accounting doctrines. They are concepts and ideas. They are universal to the world. Any accountant in any country, they will have certain concepts and ideas. And these concepts and ideas are needed as logic and theory, okay, to look at how we recognize revenue, how we look at expense, and how we record them. So the CCDM, that's all you need to know. 4 accounting doctrines, okay? And the first one is called consistency. What is consistency? That is, if accountant applies certain rules, we do it the same every year. If you use a certain depreciation policy, you use it every year, okay? So that we don't want the management to have biasness to say, this one is better for me, so I use this, okay? Now, consistency here does not preclude changes. So there will be exam question to ask you, if we are consistent year in, year out, and things have changed, we cannot change. No. The Malaysian accounting standards, the Malaysian Institute of Accountants will change their standards, and all the accountants will follow it accordingly. Okay? So you just remember consistency, we apply the same thing every year, but if there's a need for changes, we will include the changes. There's the second C, remember CCDM, right? The second C is conservatism. What is conservatism? It means we play safe. We don't overstate our profits. We understate if we need to, okay? However, if we always understate, then slowly, year 1, year 2, we may create some reserves, and over the years, it may create quite a huge hidden reserves, okay? So this may overstate some future revenue or future profits. So accountants also recognize that, and that is why we also have fair value accounting. Okay, we will include certain things, although we are conservative, when it's fair enough to have fair value accounting, we will do it. An example, I buy a piece of land 10 years ago at 5 million. Now it is 15 million, 1-5. So over the years, the value of the land has gone up by 10 million. So there is some reserves, and there are ways that accountants will show it, okay? But you just remember, conservatism here means we just play safe. We don't want to overstate. Now the next one, you remember CCDM? The D stands for...
All, go back to the slide.
Yeah, here.
Conservatism, highlight the important topic for exam, please. Which one will come up for the exam? Participants, what do you think?
Excessive application of conservatism.
Pardon?
Excessive application of conservatism.
Yes, that is the most important, because they will ask you, overuse of conservatism will lead to what? Will lead to what? Hidden reserve. Hidden reserve, huh? Remember that, overstatement, and then can create future accounting period, will result in future accounting period, overstatement of the future, because it's not accounted for. Yeah, overuse of conservatism. For example, Puiwa says just now, if the asset is valued upwards, it's already market value, and you did not revalue it, do the revaluation of the assets, and come up with a capital account, capital reserve, what happened? Your assets value should be in the market, but now it's based on historical cost, on the purchase cost. So there's a hidden reserve. That means there's a hidden reserve. So that's why in exam, remember, overuse of conservatism can lead to hidden reserve. For example, closing stock. You may value it very, very low or very, very high. Later on, you can see that the valuation of the closing stock will affect the profit. So remember this, you're too conservative, also no good. Hidden reserve. Okay?
Thank you, Paul. There is also a possible exam question that they will ask you about this fair value accounting, okay, which basically means the assets are valued at current market price, but it's unbiased estimate by the accountants. Sometimes they need the help with the valuers, okay? So you can see 1 or 2 questions will come out from here. Okay, the next one, CCDM, D stands for disclosure. So what is there to disclose? What we are saying is the directors must disclose the accounting statements to be honest and accurate. Okay, they must follow the accounting policies. So these accounting policies, remember just now on the earlier slide, we say there is a CA 2016 is Company X 2016, yeah? And then there's MFRS. So this Companies Act says the accounts must be circulated to private companies within 6 months. And if it's a Berhad, public company is within 30 days. From AGM, private company is within 30 days after circulation. Okay, so what they will ask you is, sometimes if in disclosing there is some inconsistency between Companies Act 2016 and MFRS. Let me just bring you back. Just now there was a slide between MFRS and CA 2016. You just remember, Companies Act is go to Parliament. Parliament usually takes a long time to amend any rules. Whereas MIA, as the accounting board, they will review the rules every year. So they are ahead. So we will follow MFRS. Is this illegal? No. Why? Because Parliament inside Companies Act have already provided that MFRS shall prevail. Why? Because they are faster to change. Okay? So this is one of the things in disclosure. They must follow CA 2016 and MFRS. And if the disclosure rules, you look at this last point, change from time to time, we follow MFRS. It will prevail over Companies Act 2016. Okay, you write this down as your exam questions, the possible exam questions. They won't ask you what is this Financial Reporting Act and all that. This is something for the accounting rules to know, the accountants MIA to know, and MIA will change the accounting rules accordingly. Okay, remember CCDM, materiality. M stands for materiality. So inside this slide, you just write MOI, materiality of information, and MOA, materiality of amounts. What is materiality? What is keutamaan or importance yang mustahak? It means just relative importance. Relative to what? Relative to the size of the business, relative to the size of the company, okay? And relative to the value of the information. Okay, you see, if a company owes water bill or tenaga bill or telephone bill, utilities bill, the implication of it is not as wide as there is a legal suit. So if they have any legal suits coming, they will need to report that. Okay, so it's materiality of information. Whereas materiality of amount means we look at the size. Okay, let's say a company owes 10,000 or 20,000 utility bills. But for a small SME, that may be quite a material amount. Let's say in a year, they have spent 200,000 on all their operating expenses. 20,000 is about 10%. It's material for them. Whereas 20,000 for a big company, say Samdabi, or even for a bank, 20,000 is nothing. It's immaterial. We call it immaterial, not so important. So in that case, that amount will not be shown inside the accounts. It will be treated inside the accounts, it will be recognized, but they won't have to specifically disclose it. Okay, so this doctrine materiality is what the accountants need to specifically highlight to us. Is based on MOI and MOA. Okay, So based on these 4 CCDM, we will have a few questions already, accounting doctrines. So a quick recap here. Can you just tell me what are the 4 accounting doctrines that will come out in the exam? Everyone, just on your mic.
CCD.
Consistency,
Very good.
conservatism, disclosure, materiality.
Okay, tell me what is consistency? What is this?
Continuity, consistency, apply the same
Continuously and
everywhere.
consistently observe and apply.
Yeah, you do it the same thing year in, year out, but we recognize there will be changes. If there's a need, then the accountants will change, yeah? And the company will change accordingly in their accounting books. Conservatism, what is that?
Not overstated.
Yeah, we don't
Fair
overstate,
value.
we tend to understate. And as Paul, our master trainer, has pointed out, there will be questions on that, okay? Remember this, there's no excessive application. If there's excessive, it will give rise to hidden reserves, okay? So it may also understate earnings. So accountants will take note of that, okay? Another possible question is fair value accounting, okay? And then the next one is what? The next doctrine? Can somebody tell me?
Disclosure.
What does disclosure means?
Statement to be honest.
Yes, you want to, yeah, you want to be honest, accurate, yeah, okay. And if there is some accounting standards has changed, let's say disclosure rules have changed from time to time, between the MFRS and Companies Act 2016, which one do we follow?
MFRS.
MFRS.
Yes. Why? Because it's already allowed it, okay, under this act, yeah, Parliament already recognized it. And then the last one is, the last doctrine?
Materiality.
Materiality.
Okay, you will see this word materiality later on, so you just have to faham what does it mean? It means relative importance, okay? And what are the 2 things that will come out in the exam here? What materiality?
Information.
Yeah, MOI, what type of information, okay, and how much is the amount? It's relative to the size of the company, okay? That's very good. So the next one, remember at the beginning we say accounting, this chapter has accounting doctrine, accounting principles. Now there are 9 accounting principles here. You can use this as your mind map page, yeah? You can write in your own notes, you can write things here, okay, by the side here. So what are accounting principles? They are just rules, conventions. Conventions means people just follow lah, okay? And it's just a general guide for us to measure transactions and put it into the books, okay? Now the practical side of interpretation, it may differ from one user to another. So that's why they have accountants all over the world, they have principles, okay? These principles will give us some uniformity, okay? For users like you and me, we are users of the financial reports to understand the information and to make appropriate risk judgments. Remember at the beginning, we said there are already questions, right? What's the difference between management accounting and financial accounting? Financial accounting is used by external stakeholders. Are they used by the government?
Yes.
Yes, okay. When companies submit for tax purpose, the government will make use, right? Are they used by bankers? Yes, used by you and me, right? We make judgments, risk judgments to lend or not to lend. They are also used by creditors. Creditors will take a copy of the report from their buyers and say whether I want to grant credit or not. So all of us, we need help to understand information, okay? So we'll quickly go through the 9 of this and we will tell you which one is important that will come out in the exam, yeah? The first one is actually double entry, but in our slide, it will show something at the end, okay? This is double entry. Basically, it just means debit and credit. Accounting is like idiot box. It must balance. What you put in, what you take out, A plus B equals to C and all that, it must balance. Okay? Just understand that is this to help us to know what the window dressing practices, if there is, or if it doesn't balance, that means something is missing. Okay? We will go through this accounting equation later. You just write down debit and credit. It always have two sides to it. Any transaction has debit and credit. Okay, this is an next principle which can come out a favorite topic in the exam. So you highlight this, yeah? Entity principle, here it means the owner of the business is separated from the business. Okay? If it's Sendirian Berhad or Berhad, it's very easy. You know shareholders, like you and I can buy shares in RHB bank and whatever bank or whatever big company. We own the shares, but we don't own the business per se. So there are two books, right? Okay? How about sole prop? How about partnerships? Now, this principle is accounting principle, which is different from the legal principle that we learned in CCR 2. In CCR 2, we say sole prop and the owner is the same, right? You can sue it's the same person, okay? But let's say me, Kat Annie, I want to open a nasi lemak store. So I'm the owner, Annie. I have a nasi lemak store. I put in 50,000. I buy rice. I buy a little store, table and chairs. I buy the nasi. I buy the ikan bilis. In my books, I have one a savings account with RHB. I will take out 50,000. Then I will keep another book called Nasi Lemak Annie. Then I may open another account and keep this separate. I will say 50,000. So first day I buy nasi, beras, how much? So that's why we keep the books separately. This accounting principle, remember, is to keep separate books, right? Okay? So although legally it's the same, but in accounting we keep it separate. So that why we can track how much we spend, how much we untung, what is the balance sheet. Okay? Now, this you can see there are many forms of entities, so prop and all that. So these are the legal type of entities. Okay? But when you have a book, let's say I'm a member of Selangor Club, I'm a member of whatever club. The club will also have their own books, which is different from all the books of all the members. Okay? Just remember this, it's just entity principle. The business books and the owner books are different and it has a different meaning from legality. Okay? Next one, monetary principle. Monetary principle is very simple. Everything must be written in money, money, money. In Malaysia, we put our accounts in ringgit terms. If you are in Thailand, you put in Thai baht. If you are in Singapore, you put in Singapore SGD. Okay? It's not so important, but just remember, it will be on monetary basis. Why? Because certain things cannot be measured. For example, I have a restaurant. How good is the chef? How good is my service? Those things cannot be directly expressed in monetary terms. Okay? But how much I sell for one plate of rice, how much I sell for one steak, and what is my revenue for the day, we can note it down. Yeah? So monetary. Historical costs. Historical costs sometimes will come out in the exam. Okay? It will just tell you we record the actual cost that we bought it for. Okay? The company will have to put it in at the original cost of acquisition. Even if the asset has risen or fallen over time, there is depreciation, we just take the original cost of acquisition minus the depreciation. So this is comprehensive income, statement of comprehensive income. The common word or the old word is profit and loss account, which you still find us using it, okay? Day to day, we say we just want to record how much is the income, how much is the expenses. Statement of financial position, the old name is called balance sheet. Okay, it does not reflect the current value. Like we say, we buy a land at 5 million, now it's 15 million. Okay, and then usually we buy our assets like cars, machinery, all at historical cost minus depreciation. For land, at certain years, we will do a fair value accounting. Okay. The next one, this is an exam topic. Yeah, highlight it. Yeah. Going concern. Actually, going concern means it will continue as long as possible. Why? Because when I put in 50K into my nasi lemak, or 500K, or some big, Oriental Coffee, all that, they have 5 million. We want to generate income from our assets. So the earning power is the significant basis for the business to continue. This principle means we take the business that it will continue and we will value it as continuity basis. We are not looking at this year, 2025, our business can last until December. Come January 2026, we don't think you'll go on, so we look at the cost of liquidation of all the assets. No, we don't do that. Okay? Excuse me. This principle is important because when an auditor feel that, this company makes a lot of losses, next year don't know whether it can continue or not. Then they may come into, later you will learn, qualify the accounts. Or the auditor may think, next year it can still continue as long as the sponsors or the shareholders or the directors keep on pumping in money. Then they will also disclose that. So there is this principle. If they don't say anything, we just say, the business will continue as long as possible. Okay? This is a possible exam topic here. Earning power. Okay? Okay, accounting period. Just very simple. Accounting period, business will continue. It's divided into chapters. So this chapter is called accounting period. It's usually 12 months. The normal one is 12 months. But sometimes, especially listed company, we want to report results on a shorter period. It can be 3 months, 6 months, 9 months. Those are called interim periods. Okay, this accounting period is just to tell us there is also consistency. Okay, this is fundamental inside accounting. Okay, now this is important, very, very important, 5-star. You must write it down in your book, because not only the question will come out under accounting equation principle, it will come out in later parts of the chapter, as we will tell you. So remember, there is just one equation inside accounting. Assets. Sorry, I moved my finger a little bit. Assets equals to liabilities plus capital. Another name for capital is equity. Okay? Then they just play around with it. If you take liabilities to this left-hand side, that means assets minus capital. If you take capital to the left-hand side, it's assets minus liabilities. If they ever ask you to play around, they may just give you what is the total asset, what is total liability. They don't tell you capital, so you just calculate lah. Let's say asset is 100K, liability is 80K. That means capital is 20K long. Okay? It will just come out as, what is the accounting equation? You just remember A equals to L plus C. A is current assets plus your non-current assets, or in the old name, it's called fixed assets. Liabilities is the same. Current liabilities, non-current liabilities. Capital is the shareholder funds, what your shareholders have injected, pay up capital, plus the profit that you earn along the way, retained earnings. Okay? Just remember this, Okay, the next principle, accrual or matching principle. It is just to tell you we must match the income earned from that period against the expenses earned from that period. Okay, whatever we have used. So we have all the revenue here. Later we'll teach you what are the operating revenue, non-operating revenue. Then, if let's say I am open a nasi lemak shop, right? I have table and chair. I have the rice cooker. I have, say, coffee machines. that can be used for more than one accounting period. Let's say it can be used for 5 years, the rice cooker, then we will depreciate over 5 years, then you have depreciation here. You don't worry so much about this. We will go into details in the next few hours. You just need to know that accrual matching period is to match the income with the expenditure. Okay? So you just look at all these words, yeah, expenses, offset, depreciation. Okay, it just means that whatever income we earn, we minus some expense, we minus some depreciation to get our profit. Okay, realization principle. Generally, we recognize revenue when it is earned, right? And then when do we realize revenue? Can everybody, you write down this into your slide, yeah? It's not given here, but they are just 4 rules of realization, yeah? When is revenue recognized? Okay, first of all, the first point there must be an agreement between buyer and seller. Let's say somebody come to me now in the middle of October and say, I have got a birthday party 1st November. Auntie Annie, can you bake me a cake? They say, can. So we have an agreement. And then I make the cake on the 1st November, I deliver the cake. I'm the seller, I deliver it to the buyer. Okay, that's the second point. And then the title of the cake has actually passed because once I transfer it to the buyer, I don't own the cake anymore. But let's say on the 1st November, they don't pay me. They say, okay lah, you wait, until I get the ang pao from my party to pay you back 1 week's time. Can or not? I say can. They will also have told me at the beginning when they order the cake, hey, auntie, I cannot pay you in full yet lah. When you deliver the cake, I can give you a deposit. I pay you in full 1 week later on the 7th of November. Can or not? And I say can. So the fourth point is revenue can be recognized. Either they pay me in full or they pay me in cash. Okay? Can everybody?
Sorry, can you please repeat the 4 recognize?
Yeah, I will type it down in the chat, yeah? Give me some time,
Thank you.
There are 4 things here. There must be an agreement between buyer and seller. Like I want a product to be sent to my place at when, to be delivered when, in good condition when, yeah, and how much and all that. Then there must be the product delivered. Let's say it is a car that I'm buying, right? First you go to the car dealer, you pay some deposit, then you go and take a loan. Then on the day that they tell you, okay, we have registered the car, then on the right day that you choose, you happy, you wear your baju nice, then you go to the dealer to take ownership of the car. So when you take ownership, then the title of the product would have been transferred to you. You can see this, the third point. Just now the cake, maybe you cannot see it, but if you buy a car, there will be a title to the car, right? When will is it when you pay deposit? No. When they register the car in your name, like I bought my car last year, they registered it on the Friday, but I cannot go until they say Monday you come and take your car. So the title of the car passed when I go to Toyota on the Monday, okay? Even on the day before that, even the car is registered in my name, but I have not taken possession of the car yet. Okay, you saw all this? You write it down, yeah? This is just to help you. They won't come out in the exam, but this is to help you when realization comes in. Okay, it says here, when goods or services are delivered or rendered, right? So usually when customer come to us, they either pay cash or they will tell us, hey, can you give me some credit term? I say, can. Then I deliver whatever I need to deliver. And then, remember, after I delivered the cake on the 1st November, they haven't paid me in full, but there's a promise to pay 1 week later. So I can recognize it when I deliver the cake. Understand? That's a credit term. So it's not cash accounting, it is accrual accounting, yeah? All this is part of what we're going to learn, accrual. Okay. So you know credit terms means you give them credit, they owe you money. So in the books it will be called, if they don't pay you yet, it's called accounts receivable. How about you buy cake and you buy the flour, all that? You may be a cake seller and you buy a lot of flour, so the kedai runcit will give you credit. You owe the kedai runcit some money for sugar and all that. It's also called accounts payable. So likewise, when you sell, there is accounts receivable. You buy on credit, also accounts payable, yeah? So you match it, okay? The income against the revenue. The revenue and income is the same, against the expenses. Different firms in the same industry may use different methods of recognition. Okay, for example, contractors, they have a choice when they want to, or how they want to recognize the revenue from long-term contracts. Some choose the completion method, some choose the percentage of completion. Let's say the contract is for 12 months, they may say upon end of the year, upon delivery of the contract, then I recognize the whole contract, let's say 1 million, I'll put it that way. Some they will say percentage. This month I've done 10%, I recognize 10%. Following month I've done only 8%, then I recognize 8%. Okay? So long-term contracts, they have a choice. Distributor, some distributor recognize commission, some may recognize the wholesale turnover. Let's say this example JG likes to give is like a taxi company. They own the taxis. So they have taxi drivers and all that. They recognize the whole, let's say one trip from somewhere to let's say from here to Seremban, I paid $100. So they will recognize $100 as their sales. Okay? The taxi company. But if I call Grab, the Grab driver keeps the 80%, the Grab company say keeps 20% as commission. So they will only recognize the 20% as their revenue. Okay? So this is called realization principle. Okay. So far, so good, everybody? Let's just a quick recap. Can we go back to all the 9 accounting principles? Can you all just tell me? And also those that you want me to explain more, you can ask me. Okay, this is a mind map here. What are the 9 accounting principles? Can you all just tell me? On your mic.
Entity principle.
Monetary
Okay,
principle.
Historical cost principle,
Historical cost principle,
Accounting rate principle.
Okay.
or going concern principle.
Entity principle means what? Entity?
Separate entity.
Separate entity.
The business is treated in a different book from the owner, right?
Yeah.
So you have it's like 2 entities. This is the accounting entity. It's not the legal entity, yeah? Okay? So in the exam, you must know, they're asking this from this accounting side. Okay, debit, credit. Okay, let me ask you, what is continuity?
Going concern.
Going concern.
Going concern,
What does it mean?
whether to continue the business or not based on the
As long as
operation as
possible.
long as possible.
possible.
Yeah, they have the earning power, right, to continue earning. Yeah, the company is not going to fold up. So when the company actually fold up, go for liquidation and all that, the accountant will look at the asset and say, how much can I sell it for? You know, that's the different value. Let's say I have a few rice cooker. After using for 4 years, the 5th year they think I have to tutup kedai. A rice cooker may be worth only $200 by now. Let's say I buy it for 1,000. Okay, at the end of it, they think I can sell it for 200K. But liquidation, yes. If it's going concern, I can still produce nasi lemak, I can sell, I can make profit. So it's different, yeah. It's not a consolidation of all the liquidated price of the assets. Okay, what they're saying is going concern is better. If you're not going concern, we are not sure you can go on or not, then it's a big question mark. You will learn later under qualified and unqualified accounts, yeah? Okay. And out of all this, the very important is accounting equation. Can anyone tell me what is the equation?
That equal to liability plus capital.
Okay. Another name for capital?
Equity.
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 Okay, we tell you because the accounting terms, you actually have this word pay up capital. Okay? Then later you will learn what is the equity ratio. Okay? Debt over equity. We look at it. Like yesterday, you learned principles of lending, right? And, the commitment of the shareholders, 1-to-1. They must put in, shareholders funds, this, then we lend to that. So that equity ratio. So the word capital and equity interchangeable. Okay? So realization. Just now the 4 realization principle, there are 4 things to know. Is in the chat. Oh yeah. Can I ask someone, CJ, can you help me to snapshot this little chat here and put it inside the WhatsApp group? Let me open my WhatsApp. Sorry, because when I teach, I look at the computer, I don't look at the what do you call that? The chat group. Okay. Now, let me see the time here. We will go on to the next one. After this, we can take a break. The next one is very simple. Accounting policies. Here, it means the procedures adopted by the firm, okay, in preparing financial statements. Firms in the same industry can depreciate assets. Let's say F&B, Oriental Coffee, Old Town Coffee, they all have the coffee machines, coffee machines, they can depreciate it with different tenor. But under accounting policies, you need to know only 3, and you just write down SPM, like Sijil Pelajaran Malaysia. But SPM here stands for S, substance over form, P is prudence, M is materiality. SPM, very simple. Just now, 4 accounting doctrines, 9 principles, here 3. By the end of this, you will have a few questions inside your pocket. You will pass already this particular. Okay. What is substance over form? It just means that we look at the substance and financial reality rather than the legal form. So, for example, hire purchase. I haven't finished paying for my car, but I say it is my car. In the book, I entered it as my asset, my car. Then I have another accounting entry. How much is my car loan? Okay, so that is the financial reality. The second one is prudence. If there are some uncertainties surrounding the transaction, discretion must be exercised. For example, accounts receivable. There are a lot of people who hutang the company money. At the end of this December, some may not be able to pay us. We may have to make provision. So discretion must be exercised. Same thing with your boss. We work in the bank. not every loan is good. There will be some non-performing loan. There will be some doubtful loan. But Bank Negara also wants us to be prudent, so we do have to provide. Your boss have to make judgment. And they come to you, hey, you think Annie can pay? She has been slow in paying her credit card, but how about her business loan, her small business loan, you think can pay? So you as the relationship manager got to justify. I think she can pay, but maybe not in full. Maybe we have to provide a little bit of the provision for her. We have to provide everything. There may be another company and say, yeah, I think this Kedai Kopi won't last one. I think they may not be able to pay, so it will turn NPL. Then your accounting department will have to adjust accordingly. Okay? Remember just now, CCDM maturity is also come out here the word again. It will say, should accounting policy, an alternative one be used? Would it be fair presentation? So which accounting policy or which accounting method to use, they will also have to look at this materiality. Okay?
Hold on. Could you all go back to the slides? Accounting policy. Guys, which one can come out in the exam? It always come out. Which one? SPM, which one will come out?
Again.
Yeah. Vijaya?
Materiality.
Materiality? Anyone other than materiality? Yeah.
All.
Asmira?
All three.
All. My dear friend, highlight this, prudence.
Okay.
What does it mean? Prudence means what? If the accounts are prepared and then some of the items are very uncertain, not sure, and the auditors can't ascertain it. So what happened? What's the keyword? The directors were to apply discretion. This is the director's jurisdiction. That means what? The director got to apply discretions to exercise the uncertainty. So remember exam, the keyword is uncertainty surrounding certain transactions. The directors have the discretion. That's why this accounting policy gives some power to the directors to apply discretion. The keyword is called discretion. So remember, prudence equals to discretions of the directors to determine certain value that they cannot determine. So to complete the accounts, annual accounts, they have to apply prudence. The keyword is called discretion. Remember that, highlight that. Okay? Carry on. We want?
Okay, so remember there's only SPM, right? Okay, let me just do a quick recap if anybody needs. In this chapter, we say there is accounting doctrine, accounting principles, and accounting policies. Okay, we have recapped just now. The CCDM, there are only 4 doctrines, right? Principles, there are 9, and policies, there are only 3, SPM. Is there anybody who wants to ask me anything? If you are not clear, just let me know. Okay, if everybody is okay, we will take a 10 minutes break here, and then we'll come back in 10 minutes time. I will set the clock here, okay?
Okay.
Thank you very much.
Thank you.